Hi, this is James Shug with Westpac London's end of day report for Thursday the 7th of February. Well, the two main stories today were related to the European Central Bank and the Bank of England. The ECB left its key rate unchanged at 0.75%. In the press conference, ECB Chief Draghi reiterated that recovery should begin later this year, but with risks remaining to the downside. He said again that inflation risks were balanced, but added an extra downside risk to the weak growth risk that was already there, that being the appreciating exchange rate. And he actually said that we want to see if the appreciation will alter our assessment as far as price stability is concerned, which is kind of a hint that inflation risks could be tilted to the downside if the euro were to keep appreciating. And if inflation and growth risks are both tilted to the downside, that would contribute to a building case for further policy easing. He did say that interest rates were discussed, but the decision to hold the policy line was unanimous. The Bank of England left rates unchanged at 0.5% and left their asset purchase facility suspended at $375 billion. They did, however, published a statement, which is unusual when they don't actually do anything, made the point that inflation will probably remain above 2% target for 2 years because of administrative charges related to university fees and weaker sterling and so on, but that it would be back on target after the 2-year period, and that they decided it would be better to leave policy unchanged rather than to try and force inflation lower earlier and risk an economic outcome that actually meant that inflation would end up undershooting the target. And related to that, incoming Bank of England Governor Carney, the Bank of Canada guy, he was testifying to Parliament today, and he said that he signalled a preference for combining the current flexible inflation targeting regime with a bit more policy guidance, and he certainly shied away from indicating he'd be inclined to shift to a different target, such as nominal GDP growth, which has been talked about lately. UK industrial production rose 1% in December. Factory output was particularly solid. Exports were up sharply as well, up 3% in December. So we saw a narrower trade balance in the UK. German industrial production up 0.3%, the first rise in 5 months, and some US data too, including a small fall in initial jobless claims by 5,000 to 366,000 in the latest week. Okay, so on the earnings front, there was some disappointment in the US related to, I suppose, a bias towards softer reports, and when you add all that up, we actually see some pretty big losses on markets. At the head of the close, it's just after 4 o'clock in London, the FTSE is down 1.1%, French market down 0.7%, the Germans off 0.01%, so unchanged, Spain down 0.2%, Italy down 0.3%, and the Dow is down about 0.75% at 13,880. Commodity prices have oil off 0.5%, $96.17 a barrel. Copper's down 0.3%, and gold is up 0.25%. That's at $1,682 an ounce. The Aussie dollar's at 1.031 against the US dollar. That's a little changed from yesterday. Okay, I'll be back again, same time tomorrow, with the last report for the week.